Hey everyone, welcome back to another video. I hope you're all doing fantastic and having an absolutely wonderful day. Without any further ado, let's jump right into it. So, we have some big news about Ethereum ETFs. Prices haven't dropped to zero, which is great. And this brings us some super mega awesome optimism news. Samson Mow, the CEO of Bitcoin-focused company January 3rd and a well-known Bitcoin maximalist, similar to Michael Saylor, has commented on the recent Bitcoin price surge. Bitcoin has regained $71,000, and Mo has predicted what he calls the coming of an Omega Bitcoin candle. The user seems to be discussing a recent trend in the cryptocurrency space, focusing on the actions and perceptions surrounding various blockchain technologies and cryptocurrencies, such as Bitcoin, Ethereum, and Algorand. Here's a breakdown of the main points. 1. Bitcoin and institutional adoption. The user emphasizes the significant interest in Bitcoin from institutional investors, particularly through ETFs. This suggests that Bitcoin's price could reach very high levels, such as $1 million, partly due to this strong institutional demand. 2. Perception of delusion. There is a mention of delusionalism, or similar terms, implying that some individuals or entities in the crypto space may have unrealistic or misguided views about cryptocurrencies. The user questions whether these views stem from jealousy or a lack of understanding of numbers and market dynamics. 3. Algorand's advertisement campaign. The user refers to a new advertisement by the Algorand Foundation, which critiques Bitcoin, Ethereum, and Solana for not being suitable for payments. This ad was released on May 23rd and highlights Algorand as a more suitable option for real-world transactions. 4. Bitcoin and Ethereum's transaction speeds. The user acknowledges that Bitcoin and Ethereum are not the fastest in terms of transaction speeds, which is a known limitation. Bitcoin processes about 3 transactions per second, which is relatively slow. However, there are solutions like the Lightning Network for Bitcoin and Layer 2 solutions for Ethereum that aim to address these scalability issues. 5. Purpose of Ethereum. Ethereum is described as a world computer rather than just a payments network. This distinction is important because Ethereum's broader use case includes smart contracts and decentralized applications, not just transactions. 6. Future of payments in cryptocurrency. The user points out that while Bitcoin and Ethereum may not be the fastest for transactions, technologies like the Lightning Network are being developed and adopted to facilitate faster and more efficient transactions using Bitcoin. In summary, the user is discussing the evolving landscape of cryptocurrencies, highlighting the contrasting perceptions and realities of various blockchain technologies, and emphasizing the ongoing efforts to improve transaction speeds and efficiency through technological advancements. If you've seen any analysts talk about numbers, lines, charts, reds, and greens, you know there are good candles and bad candles, green candles and red candles, indicating price movements up or down. Recently, there's been a lot of talk about Bitcoin getting ready for a gigantic price surge. This isn't just a normal surge, it's expected to be massive. An Omega candle, as Mo explained in a recent interview and multiple tweets, is a large trading candle on a Bitcoin chart, accompanied by high volatility moves. The idea is that Bitcoin could hit $100,000 based on one enormous surge. As we move closer to the end of June or early July, that's the time frame when we might see a $100,000 plus Bitcoin, hence the calls for an Omega candle. Influential figures like Cathie Wood and Michael Saylor, along with others always in the news, are now saying that Bitcoin is hyper-undervalued. When billionaires make these statements, it carries significant weight because people often believe that the rich know best. So, that's the gist of it. Samson Mow and other financial heavyweights are very optimistic about Bitcoin's future, predicting a major price surge in the near term. Hey everyone, welcome back to another video. I hope you're all doing fantastic and having an absolutely wonderful day. Without any further ado, let's jump right into it. We've got some exciting news about Ethereum ETFs. Prices are holding steady, bringing us some super mega awesome optimism. Samson Mow, the CEO of January 3rd and a prominent Bitcoin maximalist similar to Michael Saylor, has been talking about the recent Bitcoin price surge. Bitcoin has hit $71,000. And Mo is predicting the arrival of an Omega Bitcoin candle. He even used a cool Omega emoji to illustrate his point. It's always nice to see such continued optimism for our market, no matter what happens, because, honestly, based on simple math, Bitcoin prices should be much higher. Tying into this, recent daily inflows into spot Bitcoin ETFs have been nearly 6 to 7 times the daily Bitcoin supply generated through mining. On May 20th, Bitcoin ETFs purchased over 3,400 BTC, significantly outpacing the daily mining rate of 415 BTC. This contributed to final U.S. Bitcoin ETF inflows of $235 million for the day, translating to 3,518 BTC against a weekly mining total of 3,150 BTC, according to data from HODL 15 Capital. Interestingly, Hong Kong Bitcoin ETFs were also net buyers on that Monday. Despite these significant inflows, whenever prices drop by 3%, people seem to ignore that this buying is happening. Mathematically, we should be looking at a $125,000 plus Bitcoin. The reason we aren't there yet is because companies are buying over-the-counter, OTC, often directly from exchanges like Coinbase and from miners without the transactions hitting public exchanges. This allows them to accumulate large amounts without driving the price up visibly. It's fascinating to see this continued accumulation, and I often wonder when the general public will catch on. This is a constant thought for me because we keep getting news about massive inflows, but many people seem to ignore it. This isn't just about US ETFs. Hong Kong ETFs are also doing exceptionally well, though they rarely make the news. So, we've got some Omega Candle news and also updates on ETF inflows being significantly higher than the daily supply. Remember that one day when ETF inflows matched the entire daily supply, people were like, well, hope it gets better. This kind of accumulation is unprecedented. Thanks for tuning in, and stay optimistic. The user is critiquing a recent advertisement by the Algorand Foundation that targets other major cryptocurrencies by highlighting their perceived weaknesses in transaction speed and cost. Here's a breakdown of the points discussed. 1. Advertisement scenario. Bitcoin. The ad depicts a scenario where a shopper trying to pay with Bitcoin is told by the cashier that the transaction will take 27 minutes, a reference to Bitcoin's slower transaction times, particularly during periods of network congestion. Ethereum. The ad shows an Ethereum transaction with a fee of $112, highlighting the high gas fees that can occur during network congestion. Solana. The ad portrays a Solana transaction failing, pointing to the blockchain's issues with network stability and outages. 2. Algorand's pitch. The ad then promotes Algorand as a superior alternative with instant finality and low fees, claiming it is designed for the speed of life. The user finds this slogan cringeworthy. 3. Algorand's presence in the news. The user notes that Algorand rarely makes headlines and is not widely discussed in daily crypto news. Previous notable news included Algorand's partnership with FIFA for digital collectibles, but beyond that, the user hasn't seen significant updates about Algorand's usage or development. 4. Comparison with other cryptocurrencies. The user mentions that other cryptocurrencies like Bitcoin, via the Lightning Network, XRP, and Cardano are already being used for payments and have established networks and user bases. They question the effectiveness of Algorand's advertisement in light of these established competitors. 5. General critique. The user suggests that Algorand's approach